Welcome, and thank you for your time today. My name is Mitchell Schultz, and I will be going over I Know Shoes Company and the business strategy that I used over the past couple of years. As you know, I took over the company on year 10 with an EPS of $2, a return on investment of 20%, and our stock price is at $30. When I took over, the credit rating was a B, and brand image rating was 70. In year 11, I wasn't able to do much in terms of strategy because the simulation ran before I was able to log in. However, the EPS did go up by 12 cents. The return on investment did drop by 0.9%. Stock price did drop a little less than $7 per share. Credit rating did go up to an A-, and the brand image did drop as well. Going into year 12, I was really able to make some changes to the company. The EPS rose to $3.57. The return on investment rose to 26.7%. Stock price rose to $65.21. Credit rating rose to an A, and our brand image rose to a 68. In terms of strategy, there were some wins and losses. The high operating internet profit was a win in terms of strategy. The shoe quality that I was able to make was above industry average, and the company was able to move products at high numbers. Some of the losses in my strategy were lower wholesale operating profit and a relatively low internet market share. Year 13, we experienced even more growth at IKS, or I Know Shoes Company. The EPS was $4.28. Return on investment was 24.8%. Stock price jumped to $70.92. Credit rating jumped up again to an A+ rating, and brand image even jumped to a 75. In terms of strategy for year 13, some wins that I had were high productivity for the employees that I had. We had much higher quality product on the market. We had a high wholesale market share and very high operating internet profits. Some losses for the strategy that I put in place for year 13. There was average internet market share. It wasn't the worst, but it wasn't as good as it could have been. Higher production costs and lower internet market share. Year 14 was perhaps one of my best years when running the company. The EPS jumped to $5.89 per share. The return on investment was 26.4%. Stock price sharply rose to $129.74 per share. Credit rating stayed at an A+ rating, and the brand image jumped to a 77. For the wins and losses in strategy, I had a very large jump in stock price, as I mentioned earlier. I think that was due to a high operating interest or internet profit. Also, I did open 2 new production facilities that year, one in the Europe, Africa market and one in Latin American markets. I also won the Corporate Responsibility Award in year 14 due to the efforts I was able to make to help the environment, to help my employees that work for me. And overall, I just had a very large spike in revenue for year 14. In terms of losses or disadvantages in my strategy, I did have very high production costs, possibly due to opening 2 new facilities as well. Also, I had smaller market shares than in previous years in both internet and wholesale, and also a lower wholesale operating profit than in previous years. In terms of numbers, year 15 was also a very good year for me. My earnings per share jumped to $7.12. The return on investment dropped a little bit to 25.2%. Stock price again rose to $136.01. The credit rating again stayed at an A+. Brand image slightly rose to a 78. I did have several advantages to my strategy in year 15. I think something that helped the profits and revenue I was able to make um, was that I paid off all loans that the company had in year 15. I also had very, very high operating internet profit rates and a very high wholesale operating profit as well. However, some disadvantages, my market shares were on the lower side. I had very high production costs again, possibly due to the expansion of the 2 production facilities that I opened up. And in year 15, I had the first unforeseen failure happen in terms of equipment. The North American region had depreciated the majority of the equipment that I had there. About 90% of the equipment was lost and scrapped. So I had to, using the leftover cash that I had from year 14, I was able to buy more equipment. However, that hurt some of the strategy and the plans that I had to make a more profitable year 15. I was still able to meet all the expectations given to me by the board in year 15. However, I wish my profits were a little bit higher than what they actually were. Year 16 is not going to be a good year for I Know Shoes Company. Again, we encountered equipment failure this time in our Asian Pacific region for our production facilities. About 80% of the equipment we had there was fully depreciated and had to be scrapped. So again, I had to buy new equipment in the Asian Pacific facilities. I also, due to high costs, I had to close Europe, Africa production facilities and Latin American facilities. Therefore, in order to compensate for the closing of the production facilities, we are developing a much higher quality product. We're aiming for around a 6.5 star product, so we can sell them for a little bit more and hopefully compensate for the loss of production facilities and the loss of total numbers of products produced. We do not expect a very high return on investment for year 16, the final year. We are expecting it to be the worst year for IKS Company. However, we are hoping to meet at least 4 of the 5 expectations the board puts in front of us. Overall, I am very proud of my accomplishments in dealing with I Know Shoes Company. I was able to meet the board expectations, all of them, every single year, except for year 16. While the simulation hasn't gone through for year 16, I'm not expecting to make the return on investment expectation put in front of me. However, every single other year, I was able to exceed all their expectations. Every year, I was able to consistently grow the company in terms of revenue, profit, quality of product, as well as brand image over time. In year 14, I was the winner of the Corporate Responsibility Award, meaning I had the highest environmental and employee incentive programs in place at my company for the industry. I had the best environmental standing in the industry, as well as the most benefits set forward for my employees within the company. I was also the most consistent company in the industry in accurate forecasting. I was a 4-time Bullseye Award winner, meaning that I was able to accurately produce and consistently produce expectations given to me by the board with very slight variation on the forecasted predictions in all the areas that the board set in front of me, whether it be earnings per share, return on investment, brand image, stock price, etc. I paid off all the loans that the company had by year 15 and did not open any new loans. All I used to open and close new facilities, to buy new equipment, I used all capital and leftover cash from years previous. I did not use any loans. I wanted to go through the simulation without using any loans, and I was able to pay them off early as well. Throughout the whole simulation, I Know Shoes Company was in the top 5 of the in the industry on the leaderboard placement. I started out second. I maintained third place. Up until year 15, I was still in third place. However, we have yet to see what year 16 brings. Um, Overall, I learned a lot in this simulation. I did not use any outside resources to further the company. I didn't look at any tips or tricks or cheats, if you will, for the company. I wanted to see how well I could run I Know Shoes by myself, just from what I learned throughout this cohort and throughout the throughout this whole process. See what I could do every year on my own strategy. So I learned a lot. I learned that I should not have expanded too early. I think that was one of my downfalls because it just created higher operating costs in other countries. I should have possibly closed down the North American production facility and opened one in Latin America because the cost of production is cheaper in Latin America. I think I should have done a little bit different strategies in terms of distribution because I had such high distribution costs, some of the highest in the industry, unfortunately, which I think held me back from earning even more every single year. But overall, I was able to meet all the board's expectations every year. I consistently grew my company without any outside tips and tricks. I did it all by myself using my own strategies. I was winner of various awards, and I was the most consistent company in accurate forecasting. So overall, I think you'll be very proud of what I have done and what I Know Shoes company was able to accomplish over the past several years, and I hope for an even brighter future.